As I'm recording this, Brent crude just closed above $100 a barrel for the first time since August 2022. Gold is hovering around $5,100 an ounce, and silver is trading near $87. But here's the part most people are not paying attention to. The war against Iran is affecting the gold and silver markets in a way that goes far beyond the typical safe haven trade. There is a physical supply disruption happening right now that could reshape how these metals move for months to come. Welcome to my channel. I am Bogdan Macro, and this is where we track the money flows, the geopolitical developments, and the macro forces driving markets in real time. If you find this analysis useful, smash that like button and subscribe. It genuinely helps more people see this content. So let's start with the development that most financial media has completely overlooked. According to Gerald Celente, reporting through King World News on March 11th, the war against Iran has halted most flights out of Dubai. Why does that matter for gold and silver? Because Dubai is a major transfer hub for physical precious metals. Reportedly, about 20% of the world's gold bullion moved through Dubai last year. We're talking about air freight shipments of up to 5 metric tons per flight, roughly $830 million per load at current prices. When those flights stop, that metal doesn't move. According to the Financial Times, this freeze on physical gold and silver in transit could drive prices higher in Asia and spike volatility globally. John Reed, senior strategist at the World Gold Council, confirmed that gold availability has become a real concern, noting that Indian domestic prices erased a $50 per ounce discount on March 6th and jumped to world market levels almost overnight. Here's the scale of the disruption. According to Flight Radar 24 data cited by Al Jazeera, more than 21,000 flights were cancelled at 7 major airports, including Dubai, Doha, and Abu Dhabi, following the US and Israeli strikes. Dubai International Airport itself was hit by an Iranian drone attack. As of this week, Emirates and Fly Dubai are running about 200 flights combined, a fraction of normal capacity. KLM has suspended Dubai flights through March 28th. One unnamed bullion trader told the Financial Times that essentially nothing in the Middle East is moving by air right now. Some shipments were loaded onto planes at London's Heathrow, cleared through customs, and then couldn't take off because Dubai was shut down. Those cargoes now have to be reprocessed before they can be rerouted. Now layer in the oil picture. According to the IEA's March 2026 report, this is the largest supply disruption in the history of the global oil market. Crude flows through the Strait of Hormuz have plunged from around 20 million barrels per day to what the IEA calls a trickle. Brent surged $20 per barrel from the outbreak of hostilities on February 28th. On March 12th, Bloomberg reported Brent approaching $100 again after Iran's new supreme leader declared the strait must remain closed. Major P&I clubs issued notices to reprice war risk coverage. According to Lloyd's List, war risk insurance went from about $25,000 a year to around $30,000 a week. Strait of Hormuz transits collapsed 81%. The strait is effectively closed not by a military blockade, but by the insurance market itself. Now, separately, each of these developments is interesting, but together they tell you everything. We are witnessing a simultaneous supply shock in oil, gold, and silver, all driven by the same geopolitical event, and the physical markets are being squeezed in ways that the paper markets have not yet fully priced in. And silver had its own problems before this war even started. China implemented new export restrictions on refined silver effective January 1st, limiting exports to large state-approved companies. China controls an estimated 60 to 70% of global silver processing capacity. Shanghai silver inventories had already fallen to decade lows before the conflict. The global silver market has been in structural deficit for 5 consecutive years, with cumulative shortfalls from 2021 through 2025, totaling roughly 820 million ounces. COMEX registered silver inventories are reportedly down about 75% since 2020. When the war then disrupts physical transit routes, on top of that existing shortage, you get a compounding effect that is unprecedented. Let me connect this to the broader capital flow picture. Jesse Colombo, writing for King World News on March 9th, highlighted that stocks now account for over 45% of American portfolios, the highest share ever recorded. Matthew Pippenberg of Von Greyer's walked through the historical pattern on March 6th. During the OPEC embargo in 1973, gold went from $90 to $180 in 12 months. During the 1979 Iranian Revolution, gold surged from $220 to $850. The 1991 Gulf War sent gold up 10% in weeks. When the Ukraine war broke out in 2022, oil hit $130 and gold broke key resistance. The pattern is consistent. Oil shocks send gold higher. And when an overvalued stock market rolls over at the same time, the capital rotation into hard assets accelerates. So what happens next? I'm not going to give you a price target because nobody can predict this with certainty. What I will lay out are the conditions. If the Strait of Hormuz remains effectively closed, oil stays elevated and inflation expectations rise. If Dubai's air freight stays limited, the physical delivery bottleneck in gold and silver persists. If China continues restricting silver exports while industrial demand from solar, EVs, and AI keeps growing, the structural deficit worsens. And if the stock market rolls over, capital flows into precious metals could accelerate dramatically. Conversely, a ceasefire, a full reopening of Hormuz, and normalized insurance could trigger a sharp pullback. Nothing goes straight up. Draw your own conclusions. Here's my question for the comments. Brent crude just crossed $100 and gold is above 5,000. What level on oil do you think triggers a broader market panic? 120, 140, or something else? Give me your number and your reasoning. If this was useful, send it to one person who needs to understand what's actually happening underneath these headlines. Subscribe with the bell on so you don't miss the next update as this develops. This is Bogdan Macro, and I'll see you in the next one. Oh, and before you go, YouTube thinks you might enjoy this video next, so let me know if they're right.